Imagine waking up one morning and realizing that the price of silver you see on your screen might not be the real price anymore. Imagine discovering that somewhere behind the scenes, powerful nations are quietly paying over $100 per ounce for the same silver that's shown at a fraction of that price on public markets. And imagine learning that this silent battle could reshape global wealth, drain U.S. vaults, and change the future of money itself. This is not a theory, and it's not a rumor. What you're about to hear may completely change how you see silver, the US dollar, and the global financial system. Before we go any further, if you care about protecting your wealth, understanding global money shifts, and staying ahead of the crowd, make sure you like this video and subscribe to Bullion Alert HQ right now. We break down the stories the mainstream media avoids, and staying subscribed means you won't miss what comes next in this rapidly changing world. For decades, silver has been treated as a cheap metal, a sidekick to gold, something industrial and unimportant. But behind closed doors, silver has quietly become one of the most strategic assets on the planet. It's essential for solar panels, electric vehicles, military electronics, medical equipment, and advanced technologies that modern economies cannot function without. And right now, demand is exploding at the exact moment supply is breaking down. Here's where things get serious. While the paper price of silver hovers far below reality, reports and market signals suggest that China and other major buyers are willing to pay prices as high as $126 per ounce to secure physical silver. Not on paper, not in futures contracts. Real metal delivered, verified, and removed from circulation. This is not normal market behavior. This is what happens when trust in the system begins to crack. To understand why this matters, you first need to understand how silver pricing actually works. The price you see on your screen is largely set by paper trading. Futures contracts, derivatives, and leveraged positions dominate the market. For every single ounce of physical silver that exists, there are hundreds of paper claims tied to it. These claims can be traded back and forth endlessly without any metal ever changing hands. This system keeps prices low, stable, and predictable, at least on the surface. But physical silver is a different story. Physical silver must be mined, refined, transported, stored, and delivered. And here's the problem. There simply isn't enough of it to satisfy real-world demand at current prices. Industrial usage alone is consuming record amounts every year, while mining output struggles to keep up. New silver discoveries are rare, production costs are rising, and many mines are shutting down or cutting output. Now add geopolitics into the mix. The world is no longer operating under a single dominant economic power. We are moving into a multipolar world where countries are actively reducing their reliance on the US dollar. China, in particular, has been quietly stockpiling commodities, metals, energy, and resources for years. This is not accidental, it's strategic. China understands something that most retail investors don't. In times of global conflict, financial instability, and currency devaluation, hard assets win. And among hard assets, silver is uniquely vulnerable because it's both a monetary metal and an industrial necessity. You can live without paper money. You cannot build modern technology without silver. This is where arbitrage comes in, and this is where things start to break. Arbitrage is the practice of buying something where it's cheap and selling it where it's expensive. As long as the price difference exists, arbitrage drains supply from the cheaper market and delivers it to the higher priced one. When China is willing to pay multiples of the official market price for physical silver, arbitrage becomes irresistible. Metal leaves Western vaults, inventories shrink, delivery times extend, premiums rise, and eventually the paper price loses credibility. In the United States, silver vaults were designed for a world where physical delivery was rare. They were never built to handle sustained, large-scale withdrawals. When investors and foreign buyers start demanding delivery instead of rolling contracts, the system strains. When that strain becomes visible, confidence collapses fast. This is why some analysts are calling this moment World War Silver. Not because tanks are rolling, but because financial power is shifting silently. Wars today are fought with currencies, commodities, and control over resources. Silver sits at the center of this battlefield. Think about what happens if the world realizes that the real price of silver is not what the screen says. Industrial users panic, governments scramble, investors rush in, and suddenly the question isn't whether silver will rise, but whether there will be any left at any price. At Bullion Alert HQ, we've seen this pattern before. Gold went through it decades ago. The paper market held it down until physical demand overwhelmed supply. Then the reset came fast. Silver is smaller, thinner, and far more volatile. That means when the break happens, it won't be gentle. But here's the key point most people miss. This isn't about getting rich quick. This is about preserving purchasing power in a world where fiat currencies are being printed endlessly. The US dollar may still be strong today, but its foundation is debt. Massive, growing, unpayable debt. History shows us that no reserve currency survives this forever. China knows this, Russia knows this, central banks know this. And now, smart individual investors are starting to understand it too. If silver truly starts trading at triple-digit prices in physical markets, the impact will be massive. Electronics become more expensive, solar energy costs rise, supply chains tighten, inflation spikes again, and governments are forced to respond. Some will respond with price controls, others with export restrictions. Some may even nationalize mines. These actions never fix the problem. They only delay the inevitable and make the eventual adjustment more violent. This is why the current moment matters so much. We are at the early stage of a shift that most people won't notice until it's too late. By the time mainstream media admits there's a silver shortage, premiums will already be insane. By the time financial advisors talk about it, physical supply will be nearly impossible to source. That's why conversations like this matter. That's why Bullion Alert HQ exists, to connect the dots before the headlines catch up. You might be wondering why this isn't talked about more openly. The answer is simple. A rising silver price exposes weakness in the system. It signals currency debasement. It undermines confidence in paper markets. And confidence is the only thing holding this structure together. As long as people believe the price is real, the game continues. Once belief fades, reality takes over. And reality is this: silver is leaving Western vaults. Demand is accelerating, supply is constrained, and powerful players are willing to pay almost any price to secure it. So, what does this mean for you? It means awareness is your first advantage. Understanding how the game is played allows you to make decisions based on reality, not headlines. It means questioning prices that don't make sense. It means recognizing that when something essential is being given a fake price, the correction will be severe. As we move forward, watch the signals, not the noise. Watch delivery delays, watch premiums, watch inventory reports, watch what governments do, not what they say. And most importantly, stay informed. If you found value in this breakdown, let us know in the comments what you think the real price of silver should be. Do you believe the paper market can survive this pressure, or are we approaching a historic reset? Share this video with someone who still believes silver is just another metal. And if you want continued updates on this unfolding financial war, make sure you're subscribed to Bullion Alert HQ. Because when the truth finally becomes obvious, it won't be whispered. It will be shouted by the markets themselves.